help with tax, don't know what to do. The Brysons are here for you. We know every tip and trick. It's serious tax talk with a Louisiana twist.
Well, hello there. It is great to see you again, and welcome back to another installment of Talkin Tax. I am your host and moderator, Ryan Ruff, and as always, we'll have the Brysons on here in just a moment to get into another tax-related discussion. As you guys know, that's what we tackle on this show. But guess what? We got a great guest joining us as well. Mr. Brandon Juneau, a partner over at the Bryson Law Firm, is going to sit in for today's episode as well. We're going to get his insights into the matter at hand today and really unpack a lot within tax-related issues that deal with the IRS. So what are we chatting about today? Well, today we're diving into, that process really of working with an IRS revenue officer on a tax resolution case. So as you've heard us discuss in past episodes, the Bryson and their team working on the client's behalf, trying to, mitigate their tax related issue. Well, sometimes a tax revenue officer from the IRS gets assigned to a given case. And when that happens, well, there's certain leaps and bounds that the Bryson Law Firm needs to jump over and hurdles to move past, and of course some blocking and tackling that needs to be done along the way. So that being said, it's always good, as we've mentioned on this show before, to have a professional in your corner to deal with that tax related issue. So that being said, hey, let's go ahead and bring everybody on and get today's conversation rolling. Brysons, Brandon, good to see you guys. How are we doing this morning?
Good. How are you?
Well.
Morning.
Morning.
Morning. Yeah, I'm doing well. Can't complain. We're here on another sunny day. It's looking good. I'm excited to get into today's topic at hand. And again, we're kind of really addressing this idea of dealing with tax revenue officers that the IRS throws our way when an issue pops up for your clients. But let me start with this, guys, today. Kind of a high level question to frame it up here for our audience. When does the IRS really, decide, hey, we're actually going to go ahead and assign a revenue officer to a particular case? What really has to happen for an officer to be usually assigned to cases?
Well, I mean, yeah, just generally to say, these cases are special in a way because usually if a revenue officer has been assigned, it's a case that has either several unfiled tax returns, or the tax liability is over $250,000. The IRS may suspect a crime. So if it's a smaller case and you got a revenue officer, then your eyes may need to be open because they're thinking there's a crime. If it's a taxpayer that has a history of bad compliance, and things like that going on, the IRS will generally get a revenue officer involved. But usually the dollar amounts, just to kind of give you an idea what we're talking about, for an individual tax claim. For individuals, it's $250,000 generally, and for payroll tax, it's $25,000. Which payroll tax, we could talk about that as a whole nother podcast if we want. That's another topic. But payroll tax with the trust obligations involved there, the amount is only $25,000. So that's generally it. Of course, there's the case that's been through the computer, what we call the computer automated collection system, and they're just having a real difficult time collecting. They may assign those out to a revenue officer as well. But that's kind of rare, I think. But anyway, those are the cases we're talking about. So there are not a lot of revenue officers. It's not like there's a revenue officer for each taxpayer, so they can only handle, and their files are very limited. So anyway,
I would just add that it's what the IRS considers their high priority cases. So if a revenue officer is working it, it's considered high priority, at least from their end.
Roger that. And Brandon, I mean, you're a partner with the Bryson Law Firm. We appreciate you jumping on board today with us. Do you have any personal experiences that you might be able to cite with regards to working with, that hand-in-hand relationship with an IRS revenue officer to maybe get an issue solved for a given client?
Yeah. So like Carrie had kind of mentioned, once it gets to a revenue officer, it's usually pretty local. I think we've got 8 or 9 revenue officers in Louisiana, and then we work with some in Mississippi and Texas. But I mean, we've worked hundreds of cases with them. Typically what we see, because they've been understaffed the last few years, it's almost all payroll tax cases. So businesses, and then some individual high earners, with delinquent returns, they'll pick those cases up. And, we've worked with all of these revenue officers, like I said, hundreds of cases. So, we have a good relationship with them, good working relationship. And I mean, I'd prefer to work with them than with a computer system, working with
Sure,
a
absolutely.
person.
Yeah.
Yeah, it's like placing a collect call. You want to talk to a real human being.
Right.
Well, guys, we've talked about this, in past episodes, and those out there that are familiar with our show, they know we've brought up working with IRS revenue officers. But today we're getting a little more granular with it. My next question to you guys would be: let's get into the weeds of what they actually do. What do IRS revenue officers actually do when they are assigned to a given case?
I mean, their main objective is to collect the tax. I mean, it's pretty simple. The granularity or I would say the personality comes in with the person that you're working with because you do have a person, so there's a human being there. So I agree with Brandon in some of our cases. I mean, a lot of them, I'd rather have a revenue officer. With that being said, though, um, it, clients need to be careful. Taxpayers need to be careful because they are highly trained. They go through a pretty intense training process to number one, collect the tax. So you are at a disadvantage right away as a taxpayer because obviously they've got access to the system and you don't. And if you don't know kind of the ins and outs of tax work and accounting work, then you're already kind of on an unlevel playing field. So, but to
Mhm.
answer your question, I mean, their main objective is to get all the returns filed, taxes assessed, and collect, get the taxpayer into a plan. I mean, which is interesting because it makes me think in almost every case, and I think Carrie and Brandon could probably verify this. Um, One of the main demands that they'll make on a taxpayer right away is we need you to pay the tax by in 30 days. And
Right.
and then most people panic because, of course, they would have already paid the tax if they could,
Mhm.
and then they don't even know what to do at that point, which is so interesting because they don't offer the alternatives right away. Out the gate, it's I need full payment by this date.
Mhm.
So
And how many times have we talked about it on the show that the IRS is not necessarily going to offer you what, your list of solutions or tactics that you might have at your disposal. So again, helps to be working with you guys to be able to kind of walk a given client through. Question really right off the top of my head here, guys. Have you ever encountered circumstances where maybe a client was approached by an IRS revenue officer? Maybe it was physically, maybe it was over the phone or email, whatever. They were approached before maybe they even had been working with you. And then that kind of prompted them, oh boy, maybe we should seek out some professional help. And what did that situation maybe look like for you guys?
I,
You want me
I,
to take that one?
yeah,
yeah,
go ahead.
go
Go
ahead.
ahead. Go ahead.
So, yeah,
It's
it's
huge,
kind
right?
of, I would say maybe half and half. A lot of times a client will contact us after they've had some contact with a revenue officer and the revenue officers made them feel uncomfortable. So at that point they want representation. And then you have the other side of things where maybe a client comes in and they've just gotten some notices about delinquent returns and we can kind of get ahead of them, but we know at some point because of what they owe, it's going to go to a revenue officer. Uh, we prefer that if we're on it before the revenue officer is on it. Reason being, they'll never have any contact with the revenue officer whatsoever because if we have the power of attorney, we're contacted directly by the revenue officer. Um, Sometimes when the client's already had some contact, you're trying to figure out what's been said, what's been told to the revenue officer, how much information do they already have. Um, and you got to kind of get filled in to make sure you're on the same page as what the revenue officer and the taxpayer were on. Um,
Right. Sounds like you can't really be doing a lot of backtracking throughout that process. I mean, once something's out on the table, it's got to be out on the table.
And
Exactly.
just to add to that too, I mean, the stories, a revenue officer, they're actually, they're given a badge, so they will show up where, at your place of business or wherever and flash a badge, which to me is very, it's intimidating,
Scary.
and scary. And it's amazing how people react to that. They immediately forget, or well, they're not really forget. I guess they're intimidated, but we're still in this great country of ours, and we still have rights, and there's certain
right,
things we don't have to say and do. But immediately when they flash the badge, I mean, I can't tell you the stories that I have
Mhm.
where people say, "Yeah, they came in, they flat," and I said, "So did you tell them to stop and not come?" No, they wanted to come on my business, and they got on my computer and looked at my QuickBooks file, and they went into the cash register and took money out of the cash
out,
and,
yeah.
and took the cash out of the. And I'm like, what? Did you just let them do this? Well, I didn't know I could stop them. How, So they are they're very well trained. As Angie pointed out, they're trained to collect the tax, and they're going to collect that tax. That's their job. So there are things to know. When they're going to flash the badge, just to still, I mean, they have no other special rights than any other officer or legal enforcement officer in the country. They have to follow the rules. You still have due process. They can't just walk into your place of business. They can't walk and grab the register without you, of course, letting them in or inviting them in. And it's amazing how they are able to get invited in and get on people's computer and get money out of the cash register. It just
Yeah.
always baffle me, that people would allow that. But
Or
and
just, like disrupt the business. Come in the middle of like a lunch. If you have a restaurant, for example, they'll show up at noon or 11:30 when the restaurant is full and the
oh, of
workers are
course,
working, and just to create a kind of a
yeah.
scuttlebutt, a hullabaloo.
They're not there to eat lunch.
Yeah, no.
So, yeah.
Lunch ride.
Yeah. So,
Sure.
and
Yeah.
that's what I would say is kind of it's an intimidating thing, I think. And of course, it's very self-serving, but one of the benefits, I think Brandon may have alluded to it,
Yeah.
is of having representation, is that once we have our notification on file that they're represented, they're just like in any other criminal matter, any matter. Once a lawyer's involved, they have to come to the lawyer. They can't go straight to they can't bypass the lawyer and go straight to the client or to the taxpayer anymore. So that is a great benefit, is that you really don't have to deal with the revenue officer one-on-one. We would deal with them,
Yeah.
and then so that's a great benefit.
Yeah. So, real quick though, I mean, because it sounds to me, obviously, you said they're highly trained. They can be intimidating in some instances. Let's backtrack for a hot second. For those out there, maybe scratching their head a little bit, that are thinking, "Well, I file my taxes online, and it just goes through this way, and I go through an automatic system." Walk us through real quick. Let's clear that up in terms of how a revenue officer really is different than the ACS, really, those collection services.
I'll pitch that one to Brandon. He's here today.
Um, so, I mean, with automated collect, that you're basically going against a computer. So a computer's generating these notices of balances due. If the IRS isn't getting responses to those notices, or really if the dollar value gets over, I think carry revenue $250,000 is the threshold for an individual, or if you have on the payroll tax side with businesses, once you get to a certain threshold, you can't be dealt with by the automated collections at that point. So it goes into a queue, and then when there's a spot open for a revenue officer's inventory to take a case, they select it based on priority. And if you're at the top of their priority list and it gets assigned to a revenue officer, then that revenue officer has that case until it's resolved. And at that point, your sole person dealing with it, the IRS, is the revenue officer. Now, you do
Guys, I
have
got a
appeal
quick.
rights. You can always go through appeals, but you're out of automated collection. The collection officer you're dealing with at that point is that revenue officer.
I want to add to what Brandon said about automated collection, just so we understand,
Mhm.
because
Yeah.
it's computer generated notices and things like that. But there is a number to call on there, and when you call, you're not talking to the computer. That is a person that you call.
Right.
There's campuses across the country, IRS campuses, and your number just goes into the rotation, and you call. That's why people always say, "Man, I call, but I never get the same person
Right.
twice," and you never will. I mean, there's you just gets whoever answers that phone across the country. You're not even going to get the same city twice, much less the same person. So you get and if that first person didn't enter the correct notes or enter the wrong notes or didn't enter any at all, then that next person has no idea what you're talking about, and you're kind of starting all over. So and then when Brandon and us, we talk about, man, we'd rather deal with a revenue officer, because the revenue officers are going to enter all the notes, everything's trained, and things are done. It's a lot more professional. Whereas, first of all, when you call that number on the computer generated notices, you're going to sit on the phone on hold for 2 hours.
A long time.
It's
Mhm.
hours. It's not just 1 hour. It's a long time to get an answer. So anyway, I just wanted to point that out. It's a little bit different, and that's why, that's one of the main reasons why we don't really like computer generated notices, because it's very hard to get anything done.
Yeah.
It's
Yeah.
hard to get something done with them.
Right. And
Sure.
on the
Sure.
flip side, with the revenue, before they even make their contact, they know where you work. They
Yep.
have an idea of your income. They've already done a public record search. They've searched real property records. So they do a little bit of homework beforehand, and they have an idea of what you own, what real estate you own, where you work, what your income was the
You
last few.
bank. You know where you bank.
Right.
Yeah.
Well, speaking, guys, quick caveat before we get right back on track here. One thing that we've talked about, especially in the last few months of episodes that we've done together, is the idea of the IRS being so behind as a result of the COVID-19 pandemic. Let me ask you this then: in your experiences, Brandon had mentioned the queue, of IRS revenue officers that exist. Have you found any people wondering, well, hey, I've been kind of flying under the radar and maybe I exceed that 250,000 threshold, but I haven't had an IRS revenue officer assigned to my case yet. So maybe this is just kind of washing away. Maybe I don't have to worry about anything. Have you found examples of that? And then sure enough, they do come knocking when that day comes?
Oh, yeah.
Yeah. So
Yeah.
yeah, I can speak to this one a little. I mean, we have a tons of clients that are in that queue, and to me, that's the best part. If they have representation and someone to guide them, you either get out of the queue because you get it below the threshold, or or you do things voluntarily without this revenue officer telling what you have to do, and you're set up to where when that day comes, it's a lot easier to work with them. You're not just, I mean, we get them current, compliant, make payments to try to limit their personal liability exposure on the payroll taxes. So when you're in the queue, it's a good spot to be if you're actively working the case or have someone guiding you to get in position for dealing with a revenue officer.
Mm-hmm. Gotcha. So, guys, Carrie, you had mentioned the colorful example of an IRS revenue officer showing up and even ripping money right out of a cash register to be able to collect that debt. But in a more formal sense, what are the actions and collection actions that a revenue officer can take? Maybe through paperwork, X, Y, and Z that maybe sting a little bit more than the few $100s that were sitting in a cash register at your business.
I mean, they have the traditional levies, liens. Those are the two big ones. They can seize real property, which is um,
Well, only a revenue officer can seize real property, so the computer can't.
right.
So if they're gonna make
It's
a
got to
seizure
go
on
through
property, it's
legal.
gonna go through a revenue officer,
Right.
which then has to go through the legal,
I
yeah.
mean, that's a lot of work for a revenue officer to seize real property like your building or any assets, planes. I mean, homes, whatever. But
Mhm.
so it's rare. It does happen, especially in cases where the taxpayer is being very elusive, uncooperative, and has a long history of not responding to the revenue officer. So but those are the big ones. I mean, garnish the what's sort of atypical in with a business is, and revenue officers are really good at this. They will levy accounts receivable.
Right.
So, for example, if you have a lawn company and you're cutting grass for 100 people, they will subpoena and obtain through their super creditor mechanisms a list of all of your clients basically, and they will issue levies to all of your accounts receivable, which really paralyzes a business. And that's kind of the big stick in the business revenue officer world that I can think of. But normally they have traditional type mechanisms. I don't know, Brandon. You have some
Yeah,
sort of
no,
create.
I agree. I mean, that's their, I guess their big tool is they ask you for a list of accounts receivable, or they get your bank statements and see who you're paying. And if you don't get them what they request or you miss deadlines, they're going straight to who pays you. And then once
Mhm.
once customers or clients start getting that, a lot of them, depending on what business, well, I don't want to get involved with the IRS, so they just go find a new someone else to take care of their lawn or someone else to do whatever service you might have been providing to them.
Yeah.
Yeah, I mean that's no joke. I mean, so if there's one big message that we can stress to our audience is, boy, when an IRS revenue officer does get assigned to your case, it's really time to start taking things seriously. That being said, and our audience has heard me say this a time or two again, and that is it helps to have a team of professionals in your corner. So, guys, walk us through what it is that you, the Bryson Law Firm, what you guys do for your clients when it comes to an IRS revenue officer being assigned to a given client's case. Walk us through what that process looks like, not only from your, vantage point in actually dealing with the officer, but what it looks like from the client's perspective as well.
Well, I mean, honestly, I guess I could joke and say I would immediately go to Angie or Brandon and give them the file, but I really probably can't say that. So let's yeah, Brandon, why don't you answer that one? Uh,
Yeah. So, I mean, if it's a business, uh, the main question for the client, what's your goal here? Are you trying to keep this thing open, or are you getting ready to? You got to kind of figure out what their big goals are in getting out of the debt. I mean, it's like any debt. Are they trying to grow the business? Are they trying to slow down and they just got in over their head? Um, do they have property they can sell, or is it, a lot of these clients, it their intentions were never bad when they got in the situation, and this usually isn't their only debt. So they have other debts they're dealing with at the same time. So you try to kind of walk them through it to look at it big picture, and how can we get through it, work with the IRS, get them into something affordable, whether it's a settlement, whether it's some sort of monthly payment plan. And even sometimes they don't even owe it, so you might have an ability to dispute what they actually owe, depending on the how they got there. But I mean, there's a number of different things. Each case kind of brings its own set of circumstances and facts.
Hmm. I'm
I think
sure. And yeah.
for me, right, and Brandon's right. What's your outcome goal? I think initially, right away, we've got to decide. What is the taxpayer's main objective? But out the gate, when a new client engages us, my initial reaction is I've got to get in front between the client and the IRS. Like I've got to be that protective barrier to protect them. So I need to stop collections. I need to stop the things we just talked about with the accounts receivable. I need to try to prevent a lien from being filed. I need to get in front and stop the client, stop them from contacting our client, basically. I'm that guard, that shield
Mhm.
between them and the IRS,
Yeah,
and yeah.
and I think I would add, that once a revenue officer is involved, actually so we said there's a human on the other side, so
Right.
it's more like a traditional, adversarial case. Then, and our job as advocates, I think, is to make sure that the revenue officer operates within the bounds of the law,
Hold them
and
accountable.
we
Yeah,
hold them accountable to
right.
their thing. And I mean, they're not, they're not so perfect that they always operate within the bounds of the law.
No,
So we have to we I think it's our job as advocates to make sure that they
follow their
follow
rules.
their
Yeah.
rules, their own rules of
Mhm.
collections and the law, and make sure that you know because ultimately they're gonna, their job is to collect the tax to get this client into some type of resolution, and that's our job, is to resolve the case. So, as Brandon alluded to, a lot of times it's not easier, but it's just a different way, and it actually is easier to get the case resolved with a revenue officer, because you can have this collaboration back and forth,
Well, they're
and
people.
you work it through like a more traditional adversarial case that you would have anyway. So yeah, I think that's
Mhm.
right. I would say
Yeah.
let's
Yeah,
just
build
to
the relationship, and I
Y-
mean, like Brandon said, I mean, we've handled hundreds of cases with the revenue officers here. They know who Brandon Juneau is.
oh
They
yeah,
know,
I
who
think
we
we're
are.
in thousands. Yeah, I
Oh,
think
yeah, yeah,
we've
yeah.
been doing this
Sure.
long. Yeah,
So
Well, yeah, it's really interesting to hear you guys talk about also keeping them in check because, Carrie, I'll go back to your example again of the idea of the business owner not really realizing that they could tell them no in that moment where they came into their business, took cash out of the cash. They had the ability to say no, but they didn't, and they didn't know that they couldn't. So having that shield, as Angie mentioned, to be able to be in front of your client and tell them no at certain steps along the path to be able to get the best outcome for your client. Boy, does that sound nice if you're an individual that is faced with an IRS revenue officer that's coming to knock on your door one day. Well, guys, look, hey, as we've kind of covered this from point A to point B, moving through what it's like when an officer gets assigned to a case, any final thoughts you might want to leave our audience with before we wrap up today, just in regards to this idea as a whole, and maybe what they should do if they find themselves in this situation?
I mean, I think the takeaway for me is what Brandon said. If you're in this category, $250,000 or a plus, or you have business payroll tax issues, do something now. Being proactive before the revenue officer is assigned is critical. It helps the case immensely. It keeps you. It's less stressful for the client. But getting ahead would be first. And if you have a revenue officer, obviously get some help because there are some opportunities that you need to take advantage of. Um, if you have a person to deal with.
Yeah.
So
I mean, I think I would add, the point that I would make that I was thinking when Angie was speaking about it is that that example that she gave of the lawn company, that's not a hypothetical. That was a real case that she had, and she did an awesome job getting resolved. So it's not like she's making this stuff up. And I'm not making this stuff up about clients getting the money grabbed out of the cash register.
right,
Those
that's
are real
clearly out of
cases.
bounds,
I mean,
right?
it
Yeah,
Mhm.
sounds far fetched when you look back and think about it, but it's really not. I mean, those are situations that actually happen. So yeah, we're not really. If there's not an exaggeration, it's real.
Yeah. Brandon, any final takeaways on your end?
Yeah, no, I would kind of echo the same thing that I mean that these situations happen and these revenue officers they're trained. I mean they might be doing that just to get you to move, but they don't necessarily always give you all of your rights. What options do you have to stop all of this? They give you this publication the day they show up that's probably 20 pages long with your rights that you don't even read. And unless you take advantage of all that, they're just going to continue doing what they're allowed to do. And I mean, it puts a strain on the business. It almost makes it impossible at that point to what they deem compliant, get compliant while they're issuing levies, while you're trying to stay in business and pay the taxes that are delinquent.
Hmm.
Difficult
Yeah.
to do.
Well, yeah, absolutely. But again, it helps to be working with a team of professionals like yourselves to try and mitigate the damages that could happen along the way. So, guys, look, I appreciate you all carving some time out of your day to be with us and share some of your insights on the matter. I'm sure you guys probably have some phone calls to make to some IRS revenue officers today, so I'll let you get back to doing that. But hey, I appreciate you guys being here and looking forward to the next one with you.
Thank
you
you,
bet.
Ryan.
Right.
All right. Thanks, everybody. And look, hey, we want to say one final thank you to our audience for jumping aboard and being with us here on the Facebook live stream today. Look, if you took anything away from today's conversation and enjoyed it, do us a favor, hit that like button, leave a comment below, subscribe to the show on whichever platform that you're checking us out on, maybe after the fact. And of course, share this information, right, with any friends or family, business owners, anybody that you think might find themselves in a similar tax related issue. Because at the end of the day, we're bringing the tax strategies and solutions that the Brysons are working on a regular basis. We're bringing them right here to you on this show. We've got some great episodes keyed up for you down the road, and we'd hate to have you guys miss out on any of that beneficial information. So for Carrie and Angie, for Brandon, I'm Ryan Ruff. We're going to go ahead and say so long, but we thank you for joining us on today's installment of Talkin Tax.